All right. Hola. Ni hao ma. G'day, mate. Oh, yeah. How's your mum? Good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. Hey, I like to trade currencies. I was trading the euro dollar when it went up to parity. I remember the day going, oh my gosh, a euro is worth a US dollar. Holy smoke. So 20 years later, here we is, and he is we are. So anyways, I learned a few things along the way, technically and fundamentally. I did a few things right, and I did a whole bunch of things wrong. And I'm here to share because I want you to succeed. I consider myself a servant, so let me know how I can help and serve you. I want you to be successful. Maybe we can work together one day if you're a successful Forex trader. Interesting. So anyways, there are approximately 6,000 YouTube videos associated with my work on the FX Bootcamp YouTube channel, on the Trader's Way YouTube channel, on the Forex.Today YouTube channel, and on the FX Street YouTube channel. And I was Speaker of the Year at FX Street. That's pretty cool. So once again, let me know how I can help. That's a lot of resources. Think about that. That's about, 6,000 hours, probably more than that, of free resources, training, helpful guides. In the description below, you'll actually find a link to a free training course that puts it all together. How to use moving averages, how to use oscillators, pivot points, that kind of stuff. Gives you a good overview of my process for trading. I think I created that for FXCM, in fact, 12 years ago, I'm guessing. More than that, about probably 15 years ago, I wrote a book called Strategic and Tactical Forex Trading. That link is also in the description below. The interesting thing you'll find about both of those resources is that they're old, Very, very old, still applicable today. But I think what you should notice, maybe step back and go, oh my gosh, he trades exactly the same now as he did then. And I think that what that will show you is there isn't a need for a radical change. I've never promoted a new cool trading strategy. Think about that. I'm sure you guys get emails from gurus all the time. Oh, we got this really cool new trading strategy, and it's got a really funny name. The 3 pregnant nun strategy. Oh, yeah, you should pay some money and I'll teach you. No, but I will teach you how to trade. I will teach you how to analyze technically and fundamentally so that you can make trading decisions for yourself. Be a completely independent trader. Isn't that cool? Also, in the description below is a link to the FX Bootcamp YouTube community. It's $88 a year for 65 hours of training videos, and then you can upgrade your account and join the live trading group, which is swing trading once a week, or the day trading group, which meets twice a day. Once again, lots of resource. If you need the knowledge, it's $88, less than a textbook. Swing trading, day trading, technical analysis, price action, trader psychology. I'm telling you, it's detailed, 65 hours. Cool. And there's also a link to a service provider you're going to need for your successful Forex trading business. Remember, I'm a businessman. So I look at trading Forex as a business. So if you are going to run a small business, you're going to require a service provider that can gather liquidity partners and execute trades for you. Many foreign exchange brokers will trade against you because they think you're dumb money. They think you're dumb. They treat you with disdain. They'll trade against you. They'll double charge you for things. There'll be slippage built into their algorithms. So they promise you only 1 pip spread, but they slip you a half a pip in and a half a pip out, and that's actually 2 pips built into their algo, but then they'll advertise that they're their cheapest. But how do you know it's not 3/4 of a pip? See, you wouldn't even notice. What if it's 1 pip in and 1 pip out? So you think you're getting the cheapest, but you're actually paying the most, and you don't know. And they laugh at you. Ha 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 ha! Idiots. Look at all the money we're making, right? And they're all laughing. Trader's Way is different. They earned my loyalty and respect when the Swiss National Bank pulled the plug on the Euro Swissy. Big foreign exchange brokers that had tens of thousands of clients went out of business that day. Presumably because they were trading against their clients, holding the other side of the trade, but there wasn't another. So like one broker lost $500 million in one night, in 1 minute, in fact. Trader's Way was perfectly fine. They were perfectly fine. I contacted the leadership there and I'm like, how you guys doing? Brokers are going out of business. How you guys doing? They're like, we're fine, man. We executed all the trades just like we promised. I'm like, I love you, man. Tradersway.com earned my loyalty and respect then. Give them an opportunity to earn your loyalty and respect. Just visit Tradersway.com. You don't have to click the link, but there is a link in the description below. You can just go directly. You can go directly incognito. I'm not going to track you. Nobody's tracking you. Open up a demo account. See if they earn your loyalty and respect. And if they do, open up a live account. I recommend it. So here we are. We're looking at the market. This is short-term indices. Going in, today is the first day of the Fed meeting. Tomorrow is the interest rate decision. Okay. Majib says, hey, good morning. Day trading sessions are 2 a.m. and 7 a.m. Actually, it's 2 a.m. Then I do this one sometimes at 8 a.m., sometimes at 9, depending on the year, time of the year. But then again at 7 p.m. Eastern time, because what I do is I lead a session pre-Asia. We're setting up the Asia fade trade, or maybe you're scalping the Shanghai Open, that kind of stuff. That's what we do every day at 7 p.m. And then another coach, Ryan, who earned my loyalty and respect many years ago, is a fantastic coach. And he sets up the pre-European trade. So if you're going to scalp London, we got a guy there. It's crazy. It's awesome. It's awesome. I mean, dude, it's awesome. Cool. Anywho, so here he is. It's not 24/7. See, for many, many years, FX Bootcamp was almost 24 hours a day. We had coaches live for 4 hours at a time every single day throughout the trading day. And long story short, it was totally awesome. We had an amazing community. The coaches were second to none. David Pegler was one, and he's still a highly respected foreign exchange trader and coach, and he still does live streams at FX Street. Amazing dude, amazing trader, amazing coach. But the thing is, 24/7 wasn't necessary. Okay? If you have a job, or for whatever reason you don't have a lot of time, an hour a week or an hour a day, depending on your style of trading, is enough. I'm telling you. Abdullah says, I took my first swing trade on euro dollar, and you're up over 100 pips. Congratulations. That's what it's all about. Awesome. Super happy for you. Okay, let's see what is on your mind. Thank you for participating in the poll. Let's see what you're up to. 50% of you are on euro. Good job. That makes sense to me. 22% are on pound. Probably got blindsided today on that, huh? A little bit of kitty cat, a little bit of Aussie. All right, cool. Good to see that. So Aussie strong right now. Cat is strong right now. Kiwi is sort of somewhere in between. And then pound just rocketing. The interesting thing is I wanted to short pound. Especially early in the week, I was really looking at a lot of shorts. And then I might have even tried one or two, but then just had to walk away, and I've been focusing on euro. And I was pretty clear about that. Even last night, when pound looked like it was going to fall and all that kind of stuff, but I'm like, yeah, I'm kind of euro-ish. Now, I wanted dollar to fall. I mean, to rise, meaning like euro dollar to fall. But it was too early. It hadn't happened yet. So I was showing people how to kind of look at it, be prepared, look for rollovers, look at proper prices and all that kind of stuff, and see if we can get that dollar strength. Because Swissy was already strong, which is the wink, wink, nudge, nudge, hint, hint. Aye, you know what I mean? Huh? Hint, hint, nudge, nudge. Aye, aye. So that's kind of like, ooh, that could be interesting. Maybe dollar will get strong. Well, now dollar is strong. So this is kind of cool because that's kind of what I thought. Even on Sunday, I was waiting for that strength because you want to get in the dollar trades before tomorrow's decision. Not minutes before, but hopefully a day or two before. And then jam your stop and then see if you can get lucky. That's what I said on Sunday, by the way. And we knew we needed euro, like dollar pairs to go up, dollar to stay a little bit weak and then turn strong. And we might have gotten that. So if you were able to get your trades on last night and it worked out for you, especially if you're trading Europe, now it's probably jam the stop time and see if you can get lucky on the FOMC. Huh? Cool. Coolio. So let's start with euro. Everybody's on euro. Let's take a look. I'll start with the example that I took on Sunday. Sunday. Sell at 32. We came up with that plan 2 weeks ago. Then on Sunday, we discussed it again because I shorted in here, lost money. I got knocked out around here. Wah, wah, wah. And the next plan was have it come up to 33 and a half. It only went up to 33 and then dropped like a ton of bricks. Wah, wah, wah. So, hey man, planning's difficult. If it was easy, everyone would have a Lambo. Oh, hey, speaking about Lambos, I had to get a battery for the BMW, and I went into the dealership last week, and they said it was going to be somewhere between $500 and $750 for a new battery. This is a tiny little BMW. This isn't like a giant 7 Series or an X7. This is the smallest little BMW ever. And so I'm like, why is it $750? They're like, well, we'll put it in. We got to reprogram the computer. I'm like, dude, stupid. And then we got to test this, and then we got to test that, and then we got to. I'm like, dude, don't do all the tests. Just give me the frickin' battery. So I negotiated down to $500 for a battery. $500. So ridiculous, huh? So, anyways, I took the Porsche and I went to the. Oh, by the way. Porsche USA is here in Atlanta. It's the world headquarters. They have a racing track. They have a hotel. They have a museum. They have restaurants. And it's epic. And I roll into the service center and oh my God, it's just awesome. They have all these awesome Porsches in there. I'm like, hey, I need an oil change. How much is an oil change, right? A regular car. Hey man, I remember when oil changes were $20. Then they went up to 40. And now you can pay $80 for an oil change, right? A freaking oil change, a filter, drain out the old oil, put in the new oil. $80, right? So I roll into Porsche and it's $650. I'm like, whoa, what do you put in there? Liquid gold? Oh my God. So what is a Lambo? I've never owned a Lambo. What is that? Probably $5,000 is what I'm guessing. I'm guessing for a Lambo or a Ferrari, it's probably $5,000 to change the oil. But for a pissy little Porsche, $650. But I tell you, the place is beautiful. Oh my God, the place is awesome. They have racing simulators. They have this museum of like just rare Porsches from all over. Oh, just, it's awesome. It's like an experience. And then they're like, when you're not looking, they hit you over the head with a pipe and you fall to the ground. And they take your wallet and you're like, $650. Yeah. Yeah, Bentleys and, yeah, Rolls Royces are nice. Yeah. I think I'd buy an old one. Therefore, when you change your oil, it's only $100, right? You know what I was looking at the other day was a 1962 Corvette. They're beautiful. I'm not a Corvette guy. The brand new ones are gorgeous. But like the 1962, you can Google it if you want. 1952, 62 Stingray convertible. And back in those days, they put chrome everywhere, and there's like chrome around the headlights, and then it goes up on the hood, and the hood's just beautiful. And then this chrome goes all along the way the sides, and then it goes up around the back of the seats, and then comes down on the center console. So the center console chrome goes up around you, along the door, along the hood, and around the lights. Like the amount of chrome is just, it's beautiful. And I'm not a Corvette guy, but I'm like, dang. And they kind of look like the Mercedes, right? The $1 million Mercedes, and you can get this Corvette for $100K, like a beautiful one. But anyways. Cool. Richard says, do you think? No, I don't think. Then he says, oh, that is a favorite year, right? Because I don't think the 63 has all that. And they changed the headlights to pop-up or something. And then the 1960s, they still look like the old ones. So anyways. Okay. Oh, you got the A8? Those are nice. Yeah. All right. So going back to this question, do you think? No. Will the Fed raise interest rates by 100 basis points? Well, we're not interested in thought and opinion. So I've gone over it a lot, and I don't feel like doing it again today because we'll probably do it tomorrow. Just go to the Fed Watch tool and analyze the data, and you will not see what I think, but you'll see what the market has priced in using math, not an opinion. Okay, $1 trillion probably negotiated between smart money and priced. So it's as close to fact as possible. Okay. All right. So let's go back to this trade. I had to adjust this. This is so much volatility that this is 2 standard deviations from the mean. And so on Sunday, we were here, and I created all of this. I had to adjust for 2 standard deviations. And then on Monday, we were here, which was Monday night, and that's when I placed that trade, I believe. Wait, is it Tuesday? I don't know what day it is. Did I do this last night? No. So Monday morning, maybe? Anywho, the idea was there's a trend in play. Lots of volatility. Mediocre trade because really you want to catch this higher, closer to this here, but it rolled over. And what happened was you got this drop, and then you got this up, and then you got another drop, and one of these ups I took. So it was like failure to make a higher high, failure to make a higher high. We're on a 4-hour chart here. So at some point inside of this, okay, I trapped it, dropped into a smaller time frame, probably like a 5 or a 15, and got something that looked probably like this. Okay, at the price I wanted. Okay. So probably my guess, okay, on this one is the down, the up, and that's where I'm in. Now, looking at this, just the trend tells you there's 2 standard deviations below the mean. Okay, now I have to adjust this, but that's pretty rare. That's a lot of volatility. So now I have to adjust. I'm adding these last 12 candles, so 12 hours of new information relative to where we started. And it says it can go down to 130, which is a psych level. Using pivots now, we can say, well, this is just the price action and a measure of the price action. And this is the actual exit for the short. Okay, it's a range, okay, 130, which is a biggie, obviously a psych level. But what the chart says, remember the chart is not psychological, it's an algorithm. So you could argue that the central pivot is the entry, and that would predict 129 and some change. Okay. However, if you're more like it's an M3 play, then the 130 target is enough. So there should be another 50 pips profit, and then you should go conservative. Or you think the dollar's going to get strong tomorrow after the FOMC. The dollar's going to crush the euro, and euro dollar. So for example, the FOMC comes out and the dollar gets strong. Euro dollar, according to the Bureau of International Settlements, is equal to 40% of the entire foreign exchange market. 40% of everything is euro dollar. Everything. The entire $5 trillion a day, 40% of that is euro dollar. So if dollar gets strong tomorrow, it should pull the euro dollar down significantly. This is a euro CAD trade. So here's the thing. Fed raises interest rates. So Fed goes by 75. We know that. And then you need something else to say 75 is on the table for September. Right now we think it's 50, but they're like, dude, we can go again if we want to. That would be enough to increase the dollar. Dollar goes up. This has nothing to do with the euro, but because dollar goes up, euro dollar goes down, weakening the euro, and euro CAD falls. And 129.30 is probably not the correct target. What you need to have is next week's target. So this would then adjust, this would pull down, and now you get your target here, which I've already done. I did that on Sunday, projecting what would happen this week, and then extrapolating from my projection what would happen the week after, and then setting up targets. And we set this up 2 weeks ago. Okay? So how that would probably work or look would be something like this. Okay? So what do you think? Can I get a like for that? There's 100 people watching. 75% have not clicked the thumbs up button. Is this helpful, useful information? I'm trying to share logic. And by the way, in the day trading group, we set all of that up and discussed this trade for probably 20 minutes. And a few others like it. Okay. Yeah, you know, Euro Aussie would be the same. Euro Kiwi would be the same. It's all extrapolated. Okay. Taking a look at Euro Dollar, this is the one that we had trapped. Here it is trapped on a 15-minute chart. Okay. And one of the things I talked about was this idea of sideways. And if things go as fundamentally logical, we would get a move. Now, this kind of move, this velocity, I can't tell you things like velocity because we don't know. But 1 attempt, 2 attempts, 3 attempts, 4 attempts, 5 attempts, 6 attempts, that could just be a top, right? So now we're in here. And maybe this continues. Could be a rabbit, could be. What do you think? We're still in a range. Okay? But this is fundamentally driven, in my humble opinion. Okay? Kiwi should be the same as CAD. Riding the 4-hour 21. Lovely. Lovely tullium. Okay. Cool, right? Cool beans. The target is 160. We're at 162.50. There should be 250 more pips in this. 250 pips. One little trade. The top here is 63.74, and that's a swing trade. Okay? The day trading group meets right here Sunday evening every week. One of the things you'll learn at FX Bootcamp is when to trade. How much is it to join your day trading group or my swing trading group? $1,000 a month each. Oh, actually, no. $99 a month for the swing trading group, or $199 for the day trading group, which includes the swing trading group. You get everything for $199. But so we meet here Sunday at 7 p.m. looking for the fundamental play. And there's no way in hell I'm bullish euro. You got to understand that. So we definitely were not thinking up. If you look at the technicals of this market, just simple technical analysis, you would open it up. You'd open up this chart and say bearish in less than 1 second. So then you just kind of get this. This is aggressive. Oops, that's supposed to be an A. That's the aggressive entry. This is the conservative. Cool. So this is aggressively bearish. And therefore, we're going for 160.50, not 161.26. Okay? Although you could combine targets and say, there's the monthly target and the weekly target. Okay? So you could, because, look, you have to make decisions. Okay? You could just have that as your target. Okay, so those are the ones that work. Great, great, great. Once again, very important to have fundamental bias. And this is the one that probably didn't work. Okay? Where the pound is, I don't know, reacting to something that is not economically driven. And we'll get to WTI. Okay? So you have to wait your turn, and you can see I have option 1 and option 2 already built into pound Kiwi. It's going nowhere because pound happens to be strong when Kiwi's being strong. So we have neutralized the volatility. And if that happened to be a carry trade, then you're earning carry without the risk of volatility, at least in that moment. Now, Swissy is very strong. Okay? This is definitely a trend. And this is definitely a swing trade. The target for that swing trade is 114.36. Okay? So you're going to get okay? Probably hit that right before the Fed meeting. So that's an entry around 1.1630. Okay, and the target is 114. Oops, 36. So from 116 to 114-ish, right? 116.30 to 114.30. So we'll just say approximately 200 pips. Huh? Pissy little swing trade. Okay. And once again, there's no way in hell I'm a bull on this because I'm fundamentally driven. I'm driven by macroeconomics. Okay. Got to get through that. So the next trade plan could be kind of interesting. You don't see the link to the description that takes me to the... No, you log into FX Bootcamp and it's on your dashboard on the bottom of the page. So in the beginning, you get, here's your courses, here's the day trading group, swing trading group, right? You scroll down and then it says upgrade your membership. And it'll have the day trading, the swing trading group. And then over here, we'll have this, the day trading group. So click that, subscribe, and you're in. And it unlocks the day trading group. Okay, here's the day trading group. It unlocks the swing trading group. And here's the courses. Pretty simple. Cool. In fact, I think I have a test account. Okay, so right now this is just a basic membership, so I have access to all the training courses, right? Look how beautiful this is. It's beautiful. Huh? It's beautiful. It's gorgeous. Look at that. It's Awesome. And then you go next lesson. Beautiful. It's gorgeous. Okay? So okay, and then upgrade your account. It's pretty easy. Click here. Okay? Easy. Yeah, Michael, if you were a member of FX Bootcamp like 2 or 3 or 4 years ago and you're like, I can't get, you have to pay the $88, dude, and unlock it. Okay? Darko deleted the spam, but I'm tired of being alone. Thank you, Darko. Okay. And here's the pound Aussie. Zoom in on here. Like I said, it's the same trade as the euro that I set up, you know. And this, I believe, this little orange line is me showing you where a stop could be. Yeah, Michael. Yeah. If you bought FX Bootcamp 2 or 3 or 4 years ago, your account has expired. Meanwhile, we've added 2 or 3 new training courses. So you have to become a member again. Your account expired. Pretty simple. The cool thing is you probably paid hundreds and hundreds and hundreds and hundreds of dollars for now what is $88. Okay. Yeah, well, it's 2022, bro. It's been a year. All right. So anyways, same trade plan as before. Okay. This target on a weekly basis should be way down here, in fact. So down to 170. So there should be 300 pips here. But once again, the Fed meeting is going to be an important part of the move of the market. Okay, if the Fed surprises people and dollar weakens, it'll change a lot of this stuff. So, but that's the fundamental. See, that's the problem with technical analysis. Much of it is lagging, not all of it, of course, but much of it is lagging. And it's not thinking about the Fed meeting. It's not thinking about whether the market has something priced in or not priced in. It's just saying what has been happening shows you all of this. So you have to think forward a little bit and say, well, what if there's a negative reaction to the Fed's delivery of their policy statement? They might do one thing, and that's part of it, but then they might say something which has people interpret what they're going to do in the future. Now, interpret what they're going to do in the future is even more important than what they're doing. And if there's a disagreement or a misunderstanding or a gaffe, then this trade plan will fall apart. Okay? Okay. No, Roberts. No. Okay. So anyway, so you'll see much of this is the same as euro, but right now pound is strong, so it's neutralized. So what you should be planning is what you think if you believe the pound is going to be weak tomorrow, then you should be trying to set that up now. Okay, like for example, this is range bound. But you could say this is the top of the range, and for whatever reason you believe we're going to make a lower low, then, right, you'd get one of these things. So here's today's down, and then you'll get an up, and then you'll target that. This, okay, this would be the conservative, right? Because when you're range bound, you should plan on it being range bound forever. But for whatever reason, you're like, pound's going to get destroyed, and therefore you're anticipating the break. I'd be careful on the anticipation. You know, might as well, if you're still range bound, take your profit here. And if it does break, you can always have an opportunity to get back in later after the break. I don't want you guessing. See you, Darko. Oh my God. Oh. Okay, let's take a look at commodities. Gold, oil, and Bitcoin. Which one is your favorite? Let's do a poll. Out of your commodities, which do you trade like the most? Question. Hang on. Gold, oil, Bitcoin. Let's see what you think. No, just don't type it. Just answer the poll. Verb. I like that. Verb. An action-oriented person. Like sting. Sting's a verb, right? Okay, let's see. Bow. Pachow. Oil it is. Cool. Take a look at daily. We're still stuck below 100, but we're pretty gosh darn close right now. Yesterday, Sultan said he was bearish. And we were here or something 24 hours ago. We must have been about here. So the plan for Sultan, actually, you know what? Sultan was here, wasn't he? It was a perfect little trade. Cool. And so we talked about if it was trending, kind of like that type of price action. Okay. Now I'm a bull, so I had something different planned out. Okay. And I'm still thinking something like this. Okay. But I can agree that it has. Okay. But that's what I'm thinking. And one of the things I'm doing to get this opinion, because remember, I don't think, as somebody asked me, what do I think? I don't think anything. What I'm doing is I'm looking at the physical market. I'm analyzing how much oil is in supply now, and I get that through government reports, the EIA, and I track this on a weekly basis. How much oil is in storage now? Okay. And then I look at the spread in futures contracts through the months. So for example, I can look at the price of WTI now, and see that we're at $99.71. But then I'll look at the price for the September, the October, the November, and December contracts. Okay? I'll look at these prices. And the difference in these, right? So not just the absolute, but the difference between them, the spread, and then their relative price to now. And it tells me the physical conditions of the market, because those prices are based on people that intend to take delivery of oil. They're literally buying oil now. They're paying now to take delivery in the future. You understand? They actually want the oil. So that's physical oil. These are people buying physical oil. An oil truck will show up. Here's your oil. Where would you like it? And they just dump it on the ground and leave, right? So I track that and try to get an edge, try to get my alpha, okay? And so I look at that and I'm thinking like this. Then you throw in the geopolitical risk and all that kind of stuff, but it's kind of built into the pricing anyways. And so I might get something like this. Now, how did I get this number? How did I get 118.55 as a target? Okay, I analyzed this using technical analysis. Here's the bottom of the crown to the top, which is a neckline. And then you breach the neckline and you get that. And that would be technical analysis. The fundamental analysis might tell me something different. Okay? I could, for example, have a secondary target up here and say, well, we're on our way to 135. And that would create a new higher high. And that would be, whoa, dude. That would be really something, right? Because the current highest high is here, and then higher than that, and then higher than that. So then, you might even get the next phase, if that's correct. You might get something like this. Why not even higher? Okay. Now, a lot of things would have to come together, and that would be crazy. That would be cray-cray. Huh? That would be redonkulous if we go there. I'm not saying we will. So it would be a thesis. You would have a model. It's just a model. What would the variables be? What would need to happen to create that? Is there any evidence to your model? Because your model should be evidence-based. So what market conditions exist that would even create that? If you don't have the market conditions, forget about it. And what do I mean by market conditions? Analyzing past performance in technical analysis, but also physical supply, physical demand over time into the future, and say, well, it's plausible. Anything's possible, but is it plausible? Yes, it's plausible. Okay, great. Then what variables would need to happen to make that occur? And then if those variables happen and that starts to occur, how would the charts and price action come together to produce that kind of price? Because it just wouldn't be straight up, right? Like, you're not likely to get this. That's not how price action works. So it'd be more like up and down and up and down and up and down and up and down, right? That's what price action is. Well, then based on past performance, what variables would go into producing resistance? Okay. And then what variables would produce the likely support if all that other stuff started to happen? See the complexity here? So then you start looking at old supports and resistances, resist I. So let's say there's something like that. So you'd say up, down, up, down, up, down, up, down, up. Okay. And then you might want to put, daily pivot points, weekly pivot points, monthly pivot points, annual pivot points. And you start like looking for clusters of support and resistance and all that kind of stuff. And you're putting together models so you can try to understand where we are and where we're going to go if that model occurs. You could have a base case model where we don't have any drama out of Europe. Things are bad in Europe because of the crisis in the Ukraine because of the Russian invasion. But you could have a base case model where that stays the same. It doesn't really get worse. So you're not adding any variables there. You're just looking at the supply and demand of the actual physical market for crude oil. Then you can say, best case scenario, there's a solution in Europe to their energy crisis. And how would that impact your model? Well, if there's a solution, maybe we don't go to 150, maybe we don't go to 120, maybe we go to 75. So anyway, so you think about that. That's a possibility. It's a variable. And then your worst case scenario would be one of these situations where something dramatic happens in Western Europe regarding to the geopolitical risk. And what do we do now? What's the worst case scenario? We're not going to say, nuclear holocaust or something, but let's just say a complete cutoff of oil and gas to Western Europe from Russia. Does that get us to 150? Does that get us to 200? That would be a different model. So you have these best case, worst case, base case. Trade the base case and then see how the variables change over time and then adjust as needed. You see? What percentage of retail traders do you believe plan their trading strategies like that? What percentage? So the next question is institutional investors. What percentage of institutional investors do you believe plan their trades in that way? Oops, wrong one. Then the third question would be, should you or do you want to plan your trades like an institutional investor? Okay. Well, you answer that. This would be a model of no major change in market conditions due to the Fed meeting. The Fed raises, and then it looks very much like they're going to go back to 50 basis points, not 75. Okay. That's a change in policy at the Fed. And that might weaken the dollar. And so the dollar weakens for a while. And then we realize this is not the time to buy gold, and then gold comes back down. I would say something like this. Okay. Now, the Fed could surprise and say 75 basis points is probable in September. Dollar would strengthen and we would blow through this. You'd get a move like this. Okay. So I guess you could label this and you could say less aggressive Fed. And then down here, the situation would be aggressive Fed. See? Once again, models. Which one's going to happen? How the hell would I know? Now you can look at the Fed funds rate and stuff, but it'll tell you, all it's telling you is the way the market is positioned. And that's the thing. So if we discover tomorrow the Fed is less aggressive than what has been priced, then new positions need to occur, or current positions need to be adjusted. On the long run, it doesn't change a lot. On the short run, it does. That has to do with sensitivity. Okay. Jonathan says consumer confidence went down again. Of course. Okay. To me, irrelevant. Doesn't change anything. I also don't like opinions. Okay. When the market was way overly aggressive, consumers were happy. Now it's been brought down and we've put leverage, we've taken leverage out of the system, and now they feel bad. Who cares? That's like saying you're bleeding from your gunshot wound and you're not happy with the situation. Oh, really? Okay. Oh, with gold? Well, how far down will gold go? I don't think of it that way because it could go to zero, right? Not likely, but like it'll go to where it needs to go. What I'm more concerned with is I want to buy gold when the Fed cuts interest rates. Well, dude, we're a year, maybe 2 years away from that. So I don't want to buy any gold. So how far will it fall? I don't know. But right? Until it becomes so cheap that people that have a 10-year view will buy it, or people that are just want to own physical gold will buy it, or those that need physical gold will buy it, or those that are, whatever. I mean, it'll go until the market finds equilibrium. I'm more interested in when to buy and when to sell, and then use price action to determine everything else. But how about this? I could argue that the fair market value of gold is somewhere in here. Why? Okay. Well, when the world got hit by COVID-19, central banks bought gold. I discussed it as it was happening. I did multiple presentations. I showed evidence and research to show that it was actually happening, not an opinion. And now they might be just selling it back, going back to where we were. Selling the gold they bought. Okay. And we just go back to what was the fair price for gold before central banks were involved. So, you could argue somewhere in here. Somewhere between 1,500 and 1,200. Cool. Is that where we're going to go, though? I don't know. So that's why you use technical analysis. So if you were a bear, okay, and you got an aggressive Fed, you start doing things like what I'm doing here, where you'll have a down, a retest, a down, a retest, a down. You'll use weekly pivot points, monthly pivot points, all that kind of stuff. And you will take it down until it does stuff like, let's say we do this, and then somewhere around, let's say 1382, it does this. Okay, you found your bottom. That's what technical analysis does. That's why you use technical analysis. It'll fall until it stops falling. And you're like, well, how do I know? You get a reversal pattern at support. That's why you use technical analysis, right? Thank you, Jean-Guy. By the way, you don't have to do it one at a time, Jean-Guy. What you do is you click on the button and you hide user on this channel, and they're all deleted and they can never post again. One click kills 10 posts if they spam. And they can't come back, none. Okay? Jonathan says, did they buy physical gold or gold notes? I don't know. Okay. Gold is interesting because you can buy SKRs, which means you own physical gold, but you might have gold in, so I looked at a deal one time. There was a bank in Japan, let's just say they had $1 billion in gold. It was more than $1 billion, but let's just say they had $1 billion in gold in a vault, physical gold in a bank in Japan. And you could buy it. But what do you think the cost of moving $1 billion in gold to, let's say, your bank in London? Okay. What do you think the cost is to lift it from Japan to your British bank? Do you want some security? Okay, you guys are saying, well, a lot, right? And then you got to pay the British bank to safekeep it for you. Okay, you guys are saying somewhere between 10 million and 1 million. Okay, fine, good. And by the way, you can hire Brinks to do it. And there's all these steps in the middle that someone has to do an assay of the gold, right? So you're going to have to do an assay. Okay, and verify the hallmarks and all that kind of stuff. There's a process. Or they transfer the SKR to you. Safekeeping record. The bank and most importantly the banker, the bank and the banker, which are regulated, licensed and regulated. So if they're lying to you about the gold being in their vault, they lose their banking charter. That's why you want bankers involved. So you're doing a deal with somebody, but your bank in England is going to communicate with the bank, okay, banker to banker, going to communicate through, and it's similar to SWIFT, right? Where one banker says, yes, there's $1 million in cash or $1 billion in cash, right? So the British bank, if it was cash, would say through SWIFT, hey, Japanese bank, we're a British bank. Please confirm that we're talking to you. And they confirm back through their SWIFT terminal. And then you're like, this customer has done a deal with your customer. Please confirm. Yes. Okay. Your customer is agreed with our customer that they will send $1 billion. Please confirm they have $1 billion. Yes, they do. Okay, please confirm that you will transfer the $1 billion to us. And they're doing all this SWIFT stuff. And it's all regulated process. You can't lie. It's only bank to bank, all this kind of stuff, right? Well, they'll go through a similar process with the gold, but what'll happen is the bank in Japan will say, yes, this customer has $1 billion in gold. We will keep it in our vault, but we're transferring ownership. It's like a title on your house. It proves you own the house, and you could sell the house to somebody, but they don't have to transfer the house from your neighborhood to their neighborhood. You transfer a piece of paper that says you used to own the house, but for $1 million, you give the title to the house to somebody else. It could be a bank that then lends you money against the house, or it could be the new outright owner that paid you cash. But that won't need, you won't, and then you get, what do you call it? Escrow, right? And you get an escrow service that say, deposit the cash, deposit the title, exchange the cash, and then it's all done, right? And they do this, so instead of moving the physical gold, maybe the central bank just has an SKR that says they own $1 billion of gold here and $1 billion of gold there, and all these billions line up, and it's just a stack of paper in the vault, which is a computer screen. Okay, that's more probable than lifting gold. Okay. What do you think? You guys like that kind of knowledge? Huh? I bet you that 22-year-old YouTube scalper with 10,000 views a day, 25,000 views a day, doesn't know anything like that. Huh? Never even saw $1 billion deal. Anywho, we'll leave it at that. I was doing some really interesting stuff today and all that, so I need to get back to that. Waiting for the Fed tomorrow. I am not going to do a live Fed meeting tomorrow, but I am doing an oil course, and that's why. So tomorrow at 4 p.m., I will teach you how to drill for oil. Every single part of the infrastructure for drilling and getting oil out of the ground and selling it. So this is upstream. I'm telling you, every valve, every pipe, okay, everything in the drilling rig, this does this, this turns this way, this does that, this goes here, this is every single point. And so you drill down and then this is happening and this goes up and then you do this and then we do that. And then you got to, I'm telling you, then once you have drilled it and you got it and you've capped it, then what? Now it's a producing well. Now you actually have a well. So we need a drill. Then we need to add a well. Then you have a well, which means oil and other stuff is coming out. Well, where does it go? And how do you separate it? And where does it go? And how do you make money? And where, right? And so everything, I'm telling you, it's crazy detailed. We're going to do that tomorrow at 4 p.m. So if you love that kind of information, to become an expert on the oil patch, literally every piece of iron, every hose, every valve, we will cover tomorrow. I invite you to join the oil trading course. That's in the link to that is in the description below. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day.